Good day, everybody. My name is Dan Strackman. I'd like to welcome you to our very informative, exciting, and thought-provoking webinar called Launching a Fund in 2020 and Beyond. Today, we've got a great panel of people to participate. We've got Jen Hicks, we've got Skylar Stanke, and we've got Dennis Shaw. We're representing law firms, accounting firms, and administration firms. This program is going to be an hour long. We've got great questions that have been submitted by the audience already. If you do have any questions or comments, you can hit us up on the webinar after you watch it, and let us know, and we'll try to get back to you those questions and answers, or we'll answer your questions when we can. Let me tell you a little bit about myself and my firm, and then I'm going to introduce the panel. My name is Dan Strackman, as I said at the beginning. I run a firm called A&C Advisors. We do strategic advice and counsel to hedge funds, private equity funds, and mutual funds. We provide corporate governance and corporate services functions as well. If you want to learn more about our firm, please go to www.ancadvisors.com, or you can email me at das@hedgeanswers.com. With that, Jen, turn it over to you, please, for an introduction.
Hey, thank you so much. I appreciate it. I'm Jen Hicks. I'm our Director of Client Development at Capital Fund Law Group. We are a boutique investment management law firm. We help emerging and established managers in their fund formation, legal documents. We do hedge funds, private equity funds, master feeder, offshore registrations. So we run the gamut, and we're just very happy to be here and share what we can to help those managers and investors.
Great, thanks. Skylar?
Yes, this is Skylar Steinke with Sojournia Fund Services. I'm a Senior Vice President of Business Development at Sojournia. Sojournia is a fund administrator focused on technology, full service fund administrator that provides service for both emerging managers as well as established, as Jen mentioned as well for her firm, but really utilizing the back office infrastructure to support the manager through the entire life cycle of their fund from start to finish.
Great, thanks so much. Dennis?
Hi, my name is Dennis Shaw. I'm a partner at Markham LLP. We're a full-service accounting firm with about 2,800 employees, 31 some odd offices around the country. I run our New York City's office for our alternative investment group, which provides audit, tax, and consulting to hedge funds, private equity funds, fund of funds, and investment managers.
Great, thank you very much. So I think before we get started on some of the questions that were provided by folks, I'd like to ask each of you sort of, what are you seeing? Because, I know, Skylar, you're in the Midwest, Jen, you're out West, and Dennis, obviously, you're in New York. I'm down here in Florida. I can tell you from my perspective, we're seeing a lot of activity, but I would say a lot of not getting done. People sort of trying to get things going, thinking about getting things going, planning on getting things going. But at least where I'm seeing here in the Miami area where I'm located, we're not seeing a lot of action going to fruition or getting things done. So I was just curious, Jen, you're out West. I know you cover the country, but I think you could give us a view on what are you seeing out there?
Yeah, so I would say out West, predominantly, you're looking at a lot of venture capital, private equity, real estate. Many people don't know Utah's kind of a little hidden gem when it comes to real estate as well as startups. We're nicknamed the Silicon Slopes because we have such a heavy tech influence here. So we do have quite a few real estate and then venture capital as well that we do on the west side of things. But we've seen a lot of hedge getting started. We've seen real estate throughout the country. And along your lines of planning, but not executing, and I'd be happy to talk about this a little more later on. I think that it's overlooked that there are smaller steps that they can take to get to a full fund launch. And sometimes you either see they don't launch at all or they launch too soon when they really have no business starting a fund. So there are steps that we can help them with and other providers can help them with to get to where they need to be successfully.
Great. Right. I think that'd be interesting to hear your thoughts on that a little bit later. Sky, what are you seeing?
Yeah, great question. I guess on the fund administration side, we see, a lot of hedge fund managers still trying to make decisions by year end. That's been a focus right now in the last few weeks. Also, though, more on the West Coast, seeing private equity, real estate, VC opportunities where folks are looking to deploy capital and setting up the fund at the same time, right? But I think there's still some infrastructure things that we have to talk about. I would just say, hey, you have to plan ahead here and make sure you have everything set up. Working with legal, working with us to set up the fund bank account, getting the operational infrastructure set up before you're ready to go and capital raise or whatever you're looking to do. So a lot of folks in the planning stage right now, but folks are starting to pick up and make decisions. But we're always trying to make sure that we are ahead of the game based on what we need to set up, putting the piping in place, if you will, from an operational perspective.
Sounds good. Sounds good. Dennis, I know that you guys are sort of right about to enter your busy season. You know, we're 6 weeks away from all hell breaking loose for every auditor in the country and beyond. And some of those guys who call themselves auditors in Canada, who we know they really don't know how to audit. And some of those guys down in Cayman who we don't even know why they call themselves auditors. But anyway, I know that you know, your group is focused on audits and tax, and it's busy season, you know, T-minus in 6 weeks and counting. So I know you're busy on that front, but from a new launch perspective, what are you guys seeing? Because I know, you know, when I'm going to let you answer in a second. I know you're chomping at the bit, but I want to just make sure you got the whole question. I know that, you know, like Jen's group is always sort of usually the first call. You are usually the second call. And I know, Sky, you're kind of the third call from a new manager, an emerging manager, right? So Dennis, what are you guys seeing?
Well, we're seeing a lot of different things. Year over year, I would think that new opportunities from, you know, this time 19 to today is less. But we're still seeing some brand new emerging managers that never managed a fund before. One of the things is there's been in the last quarter, there's been a huge spike in the SPAC business. And we're seeing a fallout probably in the last 6 weeks. I've probably spoken to about 6 fund managers that are launching funds to invest in SPACs to coincide with that release. Also, another thing that we're seeing we do a lot of series funds, and a lot of my existing clients are launching new products within their already existing structure. So it's a new fund, but within the structure. So overall, it's been a pretty, you know, from a new business standpoint, it's been a pretty good year. But from that traditional new manager breaking out from some way and launching, I've seen personally a big decline in those types of things.
Right. I think that's right. I think you're seeing, that's at least what we're seeing as well, is a lot of funds who are existing, starting new products or expanding their product offering. So I think that's interesting. So let's get right into some of the questions. I think we'll start with you, Jen. I guess the first question is, what is a manager or an emerging manager let me say, before I forget, apologies to anyone in Cayman who I offended. I'm not going to say apologies to anyone in Canada, but to definitely apologize to anyone in Cayman, because I do work with some of you guys and I like you very much. Wink. Okay, anyway, come on, that was funny, the wink, if we're on camera.
You're never going to get to go to their beaches. There's going to be a sign at the airports.
Listen, I live in Florida. You know what I mean? So we got great beaches. Come on down. We need your money. So anyway, Jen, let's get to you right now. I mean, because this is the crux of what people are thinking about. When I'm launching a fund and I call up you, what should I expect to get out of your firm, and sort of what are the deliverables, but more importantly, tell us about how you guide a manager to launch.
If they're a first-time manager and they're emerging, typically they may be spinning off from another fund that's already existing. They've been in finance, they've been in the industry, and they're looking to really ramp up and get things started. The one thing that I say is, it really doesn't matter if you've been at another fund, if you've never been there for the birth of the baby. There's so much that goes into the formation process and providers and everything that really coordinates together that they aren't aware of. So what I try and chat with them about is not only their strategy, not only what they're looking to do, but what's their short-term goal, what's their long-term goal, what's their business strategy, what's their capital raising strategy, their marketing strategy. It's not just an investment strategy and you're off to the races. There's so many different parts that go into it to create the whole picture. And so I try and really just open their eyes to all of those pieces so that they can go and research and educate themselves, because as everybody here knows, we can't hold your hand the whole way through it. You have to be able to be self-motivated to go and learn, and then come back when you feel like you're ready and you have those questions. And then I also work with them, coordinating, getting them set up with amazing providers such as the three of you to have those conversations and get that going. But on the second part of your question is what they should expect. I would say ask around first off, talk to other providers that they're speaking with. Ask them what they think of a certain provider. I mean, most people in the industry aren't going to badmouth, but they're going to let you know if they've had great experiences or if they haven't. And so I think integrity, reputation, that's extremely important. Quality of work. You know, sometimes we see and we hear and I'm told, hey, you know, we really like you guys, but why are you more expensive than X, Y, and Z? And I just ask them, well, compare what you're getting, compare, you know, the level of service, what you're looking for. We don't do boilerplate. We don't push out documents. We walk you through it step by step. And I think that's what you need to have in an attorney, especially if you're an emerging manager. Questions are going to come up, legal questions, questions that could be the make or break of your future fund. And so you need to have a partner and a team member to guide you through that.
Yeah. You know, I want to get back to one thing you said. So you said, and I think you're right. Nobody badmouths the industry. I mean, all of us have been in this industry for too many years. One of us on this call, he and I both call each other dinosaurs in this business because we've been around so damn long. But one thing I think is fascinating, and you know, you hit right on it, that there are some people, wrongfully so, by the way, who think that these are, you know, legal is just pumping out documents. Can you go into a little bit about how these documents, customized is kind of a weird word, but are created specifically for the fund? I mean, obviously you're talking about things like strategy and structure and things, but can you like explain that a little bit?
Right, and it depends on the type of fund. You know, sometimes we have a manager that says, hey, I have somebody that created these documents for their fund, can we use them? And we'll look at them and they're for a real estate fund instead of a hedge fund. You know, it's simple things like that. I mean, those are mistakes. Those are common mistakes that managers are making.
The emerging manager needs to make sure all their bases are covered, and they're looking at all the documents, all the information that's needed to run a business successfully and build the right foundation. And that's sort of what you guys are doing. Is that's what I think I covered. Got it. Thank you for that. That was very helpful. Dennis, you know, one of the things that people think about when they're talking about auditors and tax preparers, and I know you're on the audit side, but I know you can talk about tax, is that they often just think you guys are adding up numbers. And tell us a little bit about how deeper you go, both on the audit side and on the tax side, because I think that specifically when working with emerging managers, my experience working with you and some other of your competitors has been that the audit and tax prep folks are more than just people who add numbers.
Well, thank you. That's true that we are more than just adding up numbers and everything else. Most people don't understand the role of the auditor. I get questions all the time about from people how I value this investment, how I value that investment. And that's just not what our role is. Our role is we're here to protect the auditor's side, and I'll talk about tax in a little bit. But on the audit side, we're here to represent the investors and that the investors' interests are being protected. And that's the role. So we perform series of tests on the financial information that management provides to us to determine whether or not it's reasonably presented. And what does reasonably presented mean in very layman's term? If you're reading the financial statement and something is missing, if that information wasn't missing, would it change your investment decision, or what effect would it have on your investment decision? And that's really the criteria that we look at things and saying, what would a prudent, if there is a, for an example, an expense missing and it have a big move on performance. Performance goes from, say 12% to 6%. Well, that's an obvious one, right? We say, well, a reasonable investor would think twice if they think they're investing in something that's got a 12% return versus a 6% return. Taxes, on the other side, is, besides the fact that the rules and the laws are extremely complicated, we try and get the best advantage to the investors within the law and taking advantage of different things in the law and understanding what's going on. And the problem that we see a lot is accountants and auditors and tax people like to have their clients. So we see somebody bring in somebody that's an auditor, and I would caution against this, that has not worked in the investment management space. And this goes true also for the attorneys. I've seen over the years great broker-dealer attorneys try and put together a private equity fund document and just botch the thing beyond belief. And meanwhile, they're great attorneys, but practice what you know. And I advise the same thing for, fund managers. When they're selecting your professionals, they have to know your industry. That, this is no time, this is your business, this is your livelihood. This is no time to go with your friend's cousin because, he worked for a big four accounting firm, but he worked in the retail group. He didn't work in the investment management group. So there are things that if you do wrong on both the audit side, tax side, and even the legal side, that you're gonna pay a dear price for, and it's gonna cost you a lot more in the end than it will ever in the beginning up front.
So I think that's very helpful, Dennis. Thank you very much. I think it's very helpful. I also think you're 100% correct. When you hire someone to build a fund for you, whether it's a legal firm or a audit tax firm, then you need to have somebody who actually knows what they're doing and can demonstrate some experience. I think Jen hit on that too when she mentioned, ask around, get people's opinion, see what they have to say. Skylar, I think that when people talk about fund administration, they think all you're doing is books and records, right? But obviously fund admin goes much deeper into that. And tell us what, how admins are working today and the role that they play in the operation of a fund.
Absolutely. And I'd say the fund administration space has changed quite a bit in the last, 5-10 years as well to what is offered. But at the heart of it, it's really providing an operational infrastructure independent from the manager. We do obviously books and records, but to provide a controls around the portfolio that the manager is doing what they're supposed to be doing, that they can't take out money out of the account. There's independent processes and systems that protect them and provide really what an administrator helps as well as scale, right? Helping they're creating a new business if they're emerging managers starting out. We're providing scale by providing an operations team they outsource to us to do what they need to do to allow them to do what they do best, which is manage the strategy of the fund and raise assets. I always say the operations and the fund space is a team sport, right? So we work closely with you all on the lawyers, the auditors, due diligence providers to make sure we all understand this new business that they're creating. What's the end goal? What's the future look like? And how do we work back from there to make sure that we protect them with controls and operational procedures and process to make sure they give their investors comfort as they're looking to raise capital, or the investors can say, hey, you know what, you have great providers here. They do all what we need to do. You provide transparency with reporting. You have a great valuation methodology that the auditor has signed off on, that the administrator is working through, calculating the management fee, the performance fee, providing a good ecosystem, if you will, of compliance and operational process that has been vetted, and you have specialists on hand to take care of all the requirements.
All right, that's great. That's great stuff, Sky. Let's go back to you for a minute. Skylar, tell us the role that the administrator plays in connecting with both new investors and existing investors. Are you as the administrator responsible for getting sub docs as well as offering docs to the potential client? Obviously, you would handle redemption requests, but also talk a little bit about KYC and AML and the role that you guys play in that, because that's clearly something people are talking about today. It's as you kind of pointed out, it's a relatively new thing, last 10 years that people have been really paying attention to AML, KYC issues. So talk a little bit about that.
Sure, absolutely. And that's a very important, crucial part of it. As investors are coming into the manager's fund, they rely on us to do the due diligence background checks, the anti-money laundering OFAC checks as investors come into the fund and ongoing. So we're taking a look at the investor database in the fund and scrubbing that list every quarter at a minimum, just make sure nothing pops up and there's controls around that process. So we're also reviewing the subdoc, the subscription document, to make sure everything's complete and filled out and signed off on. And that's usually, a lot of times it can come from the manager directly, where they're talking to their client, they forward it on to us, or it's come to us directly. Go back to the manager and say, hey, we received this subscription document, you approve this, and here's kind of the process we went by going through due diligence on the investor and our AML checks that have happened. But yeah, it's a continuing, ongoing process. I think it's important and crucial based on just our current environment and how we intersect with the manager's clients as they come into the fund and ongoing.
Right. I want to plant the seed in your head, Sky, about a question I'm going to come back to you on in a minute. But just think about mistakes people make when engaging an administrator. But Jen, one of the things that I'm fascinated by is, when we engage and talk with new managers or potential new managers, they make a lot of mistakes up front, right? So tell us a few of the things that you see that from emerging managers or new managers, before they engage a firm like yourself, because clearly, obviously when someone is engaging, legal is the first, step on the road, right? Or first, I don't know what the word. I'm not good today, but the first spot out of the gate is the first, right? They're always going to get with a lawyer first. Hopefully they call us first, and then we get them to you, because that means we'll get paid. But we can talk about that later. Anyway, but from your perspective, tell us what you see from these folks when the mistakes they're making. Not you, Skylar. I see you chomping at the bit there. I want Jen to talk.
So mistakes, I want to qualify that as preventable mistakes. So they're doing things that if they had just talked to somebody, they probably wouldn't have gone through that. One of the big ones, forming your management company incorrectly in the wrong jurisdiction, the wrong type of entity, and not understanding the role that an investment management company plays. A lot of times they don't realize that's your business, that's your brand, that's your reputation. Everything that you do is really, that's the nucleus of it all for subsequent funds, subsequent offerings. And so you want to make sure that you form it correctly. Don't form any entities before you talk with legal or audit or admin. I mean, they all know some of the basic structures. They can all advise you to perhaps speak with an attorney first to know what type of structure is going to be best for you. Second is developing marketing materials prior to having an offering, having a plan, having anything mapped out to where it needs to be. One of the biggest is you have these marketing materials, they're referring to a fund, they're referring to an offering that doesn't exist at this time, and you can't do that. So you've got to make sure that your marketing materials are compliant. Have them reviewed, have them double reviewed, do a 4-eye check, do whatever you've got to do to make sure what you're saying is going to be compliant with the SEC's regulations that they've put out. And it's a matter of presenting yourself and not coming across as misleading, not coming across providing false information when sometimes you have no idea that you are, because
Right.
you've done this before. But, I could kind of see a grimace on everybody's face when I mentioned marketing materials, because we've all seen those pitch decks. We've all seen somebody put up a website that's doing a 506B fund, and saying things on that website that they shouldn't. Don't have a website. I mean, if you're going to have a website, you better make sure that it's been signed off on and what you're saying on it is accurate. So I would say website, marketing materials, entity formations incorrectly, and then engaging in conversations with potential investors more than your casual, pass by type conversation. If you're talking in depth about your strategy, if you're talking in depth about this offering that isn't created yet, hasn't been drafted and developed and launched, you're opening yourself up, and as our managing partner says, you open your mouth, you got to open it all the way.
Right.
So mind yourself before you open your mouth.
Right. I think that's a very good point. I've written extensively about hedge funds, not so much private equity, but I always tell people you can't be in the I'm gonna business, right? So you got to either you're going to get pregnant or you're not going to get pregnant, or and so especially if you're talking to investors and you're going to have a half-baked idea, besides the fact that you can get in trouble with the authorities and the regulators, you're ruining the potential opportunity to get those investment dollars. Because if you convince someone to give you money and then you say, well, I'm going to have it for the fund ready in 6 months, they're going to be like, well, what are you wasting my time for? So it's a double-edged sword, I think, what you're talking about. And I think that that's really good advice. Thank you for that. I really like that a lot, actually. And it's not just because I think about it too. Dennis, I think that one of the big issues a lot of folks are thinking about right now is that COVID has impacted the way securities are priced. They think about the way audits are going to get done because of what's happening with everybody working in remote locations. Talk a little bit about what you guys are seeing, particularly on the illiquid side of pricing securities or investments in a COVID environment, and then maybe give us some advice. Give us a little advice on how you're preparing for an audit season. Let's call it unlike any before.
Well, fortunately or unfortunately, on March 16th of this year, which is in the dead center middle of our traditional busy season, we got an email that says all of our offices are shut down at 5 o'clock today, and we'll be working remote until further notice. So we went from 2,800 people basically working in office to 2,800 people the next day working remote with very minor glitches. In the alternative asset space, most audits traditionally are done remote, unlike the old days when I started out, where we would be visiting clients because the books and records are in Nebraska with Skylar or wherever Cedrea keeps their records. One investment manager is in Florida, the other one's in Utah, one's in Wyoming, one's in LA, one's in New York. So it's scattered around anyway. You could never do the traditional thing anyway. So we are not anticipating any difficulties or differences getting through this upcoming busy season and getting audits done on time. And I will say that every registered investment advisor that we audit was issued on time, which was one of the things we were concerned about when this happened. I remember that Tuesday morning logging onto my computer was like hoping everything works, with everybody, coming on. But we're a little bit more prepared for that if we have to. As of right now, most of our offices are open. We have typically 50% capacity in our offices. So that part of it, thank God we got the technology. If this happened 10 years ago, I think the whole world would be a lot worse off than what we are today because of the technological advances. As far as valuations go, I spoke on a webinar last week and we were talking about just that. A lot has to do with the industries that you're in. I have clients that are in, real estate, life settlements, litigation finance. I have one that's in restaurants that invests in big restaurant chains. I would think their anticipation, I had a call with them, they're not looking for a good year, being that they're pretty much their entire investment portfolio has been shut down. We hear people complain about how much money Amazon is worth and today, and everybody's upset about it, except every 20 minutes they go answer their door and there's another Amazon box sitting on their doorstep. So they wonder why. So it really depends on what industry people are in. Some industries are doing really well. Some, like the restaurant industry, has been devastated. So who knows when and if it's going to recover. So, there's opportunities for fund managers to look at, do you have an investment that has become worthless? How do you take tax advantage of that? You should be in advanced communication if you have real issues. And now is not the time to, hide those issues. I think, you almost get a get out of jail free card, with what's going on, to just come clean with everything. This is not the time to be, because a lot, we've been doing this long. The four of us have been doing this long enough to know managers like to hide sometimes what's really going on. This is not the time to do it. And just, getting back to what, we were discussing earlier, a lot of mistakes I think that are made in the formation is because managers think it's going to cost a lot less than what it really does. And I think they think that if it's, that they could get this done in 45 days and they could be up and running. And, I remember the first time I bought one of my Cadillacs that I had. I was a big Cadillac guy, as Dan knows already. There's no negotiation. This is what the car costs. Whatever luxury car, this is what it costs. And, they said, if you wanted the Cadillac dealer told me, if you want to negotiate a price, go buy a Hyundai. That's exactly what he told me. We don't negotiate. This is the price. And I think, when you look at things and fund managers that purchase on price is I think the biggest mistake that fund managers do, because you usually get what you pay for. And if you're going to get someone that's cares about your business and wants to help you really develop your business, it's not cheap.
Well, Dennis, I think that's a valid point, and I think it gets back to sort of what Jen was saying, which is to ask around, and get advice from folks and do that. But how do you get, and this is for all three of you, how do you communicate to a new manager that, he or she is going to have to engage an auditor, a tax preparer, a lawyer, an administrator. If they're doing Cayman, they're going to have Cayman counsel or BVI counsel, a director, right? How do you communicate that the functions that each of you and others are providing are not commoditized, right? I mean, we know that brokerage is commoditized, right? Completely. And so I'm just curious how you do that. How do you get that message across? Because you guys clearly aren't the cheapest ones on the street. Jen's firm isn't the cheapest one on the street, and Skylar's firm isn't the cheapest one on the street. So how do you guys think about when you're marketing and doing business development? How do you get that message across? I don't know who wants to answer first or whatever.
Well, I think that the biggest thing to let them realize is that you're not necessarily just paying for materials or documents or reporting, audits. It's knowledge, experience, tools, accountability, professionalism. You're paying for security. You're paying for punctuality, you're paying for expertise. So while, you know, your friend's cousin, anybody can get something off a LegalZoom and form their own documents or entities, but you're not getting everything else that comes with it. You're not getting the accountability. Our name is on that document. So you better believe that our reputation matters enough that we're going to make sure that document looks like it should. And that goes the same for everybody on this panel. Is that's our name attached, that's our brand, that's our reputation, our integrity. So I understand, you know, that budget matters, but it doesn't matter. It shouldn't be on the top 3 of what matters the most.
And just to piggyback what Jen was saying, and agree with everything she's saying, one of the things that I also explain to people is I've been doing this for over 20 years.
You look like it.
Relationships in this community. And, you know, by you get me, that means you get access to that whole community that I've developed over those 20 years. That if you need to get a hold, you know, of Jen Hicks, I can get you with Jen Hicks or Skylar or Dan Stratton or whoever else is in there, whatever different, whether it's an independent valuation firm, whatever, and we work that network. We have that network that we've built over for years. And, you know, I also explained to the fund man that we're a team, that your service providers that you're hiring, we're a team, and that you need service providers that will know each other, respect each other, and have the ability to work together. Because when problems arise, and they will arise, and we don't know what they are, you need those professionals to be able to get on the phone or in person, even though we don't do that anymore, on a Zoom call, whatever, and work through those issues to help the fund manager succeed. And that's something that people don't, that, yeah, like you said, you're not going to get that with your friend's cousin,
Right.
or your cousin's friend.
Yeah, I totally agree with all that. That's exactly right. It's more about value than price, right? What's the value on a network of experience and teams working together across all of us here and others? What does that look like? It's a planning to help, as you mentioned, Dennis. Things are going to happen, right? It's inevitable. But when they happen, do you have a team in place that has already had the experience to adjust and pivot and adapt and resolve those challenges going forward? Or are you just going to focus on price and try to wing it? And that's never a good scenario for anybody. To have a team in place to handle everything that comes up, and they've had the experience and they have the infrastructure around them, not just them, but as we talked about, all of us here together, working together, we know what we need to do. We've seen it happen before, and how do we adjust and move forward to support our manager and their clients, the investors, giving them comfort that things are signed off on appropriately, and we have a plan, and it's been executed many times, and we know what to do.
And I want to qualify on what I stated about budget. Budget is very important because you are running a business. But if you do not have the working capital within your budget to successfully launch a fund and hire the providers that are going to best assist you, then you need to go back to the drawing board. You should always watch your budget, but if your budget can't afford great, reputable, experienced, knowledgeable providers, then you need to rethink your plans because you might not be ready to start.
I think that's a very valid point, Jen, and one that most people don't think about. So I think that's very valid. Thank you for sharing that. We have a few minutes left, so I want to go back to some more operational things for emerging managers. Skylar, we got a question here about technology. Tell us how you guys are using technology and how technology has perhaps disrupted traditional fund admin.
Yeah, that's a great question. I think when you look at the administration space, there's a lot of different players in the game and new ones coming up all the time. And there's really two different models that folks start out when they, the fund administrator creates their business, right? It's they outsource their technology to a third-party vendor, and then they can, have the fund accounts and everybody else in house. But I think the challenge with that is a lot of these systems are legacy systems. They've been around for 20 years, and they're very, and as everybody knows, if you have a private equity fund, usually there's a separate technology vendor that someone's using from a hedge fund, different portals. All these systems have to communicate with one another, and it just adds layers and layers of complexity for the administrator. They have to keep up with that, and we have issues with cybersecurity and and communicating, the process back and forth across different vendors. And if the manager wants to customize reporting, things like that, they have to go back there. In fact, they're the middlemen going back to the technology vendor and saying, hey, here's what we need. How much time it's going to take to build this, and how much is it going to cost? So it creates some inefficiencies. It's an easy way to start a fund admin business, but in the long run, if you can control, you're not just a user of technology, if you control the technology in-house, which is kind of what we do on our side. We've built a cloud-based technology platform for fund accounting, for investor servicing, for portals to support our clients. To where it's elastic, we can scale up or down, so volume is not an issue. I think that's really when you have the adage of, the folks talk about, well, you can outgrow your administrator. Well, absolutely. If you don't have scale, if you're selling scale, but you yourself as an administrator can't scale, where you have bandwidth issues because you can only take so many clients and then you have to hire more employees, you're not utilizing technology to the best of its ability, then there's challenges, right? There's things that you need to pay attention to. And I would say, especially in this market, technology is crucial, given in the middle of the pandemic. How are we communicating with our clients? The days of scanning things in paper have gone away many years ago, and I'd say actually in this case, the pandemic has helped administrators say, okay, we can't operate this way anymore. There has to be a better solution. We have to be more efficient. We have to find ways to be more transparent with our managers and their investors, and provide an ecosystem that's in the digital age. We have to. It's important.
I think that's really valuable. Thank you for sharing that, Skylar.
Sure.
And I think it's interesting to think about when you're an emerging manager, can you outgrow? You have to believe in your ability to be successful, to understand when you're picking an administrator, are you going to potentially outgrow them? And you want to really look into that and understand that.
Right.
Dennis, one of the things that people often make mistakes when they launch, or where are they short-sighted? When you're working with an emerging manager or new manager, what are some of the biggest mistakes that you see them making, and what are the things that they're being short-sighted about? I know Jen was very clear about her comment about budget, and I think that's spot on, that people need to think about a budget. But tell us a little bit what you're hearing about that or seeing from your experience.
Well, I'll go even further. I think one of the things that all emerging managers do, they spend a lot of time talking about the fund and what the fund strategy is and everything else, but they should really talk about the investment manager and have a business plan for the investment manager, how the investment manager is going to be sustained over a number of 3 to 5 years, so that me as an investor say, well, I know that you're going to be in business for 5 years, so I'll write you a check. And put together a real business plan for the investment management company. That's the business, right? The fund is the product that you're offering. And I think that's a big oversight by people. I think that they also underestimate what it's going to cost. And some of the things in there, they talk about, whether it's the attorney, the auditor, the administrator, if they have a prime broker, whatever those costs. But what about rent? What about their personal mortgage? What about their personal car? What about their kid having to go to college? All these things should be factored into what it's going to cost them to live and to run this business until they can get it to a sustainable where your management fees will then sustain the business, right? Because you do not want to run a fund or private equity fund or anything, and that you're going to pay your bills with performance. Performance should be the gravy. You need to be able to stay in business based on the management fees and how you're going to get to that break-even point. I think that's a big, big key. The other thing I think that people make mistakes is they think they can piecemeal together the whole fund. Well, I'll get my attorney, and then I'll get some investors, and then I'll hire my auditor, and then I'll get a couple more investors, and then I'll launch, and I'll get my prime broker. And then when I get enough money, then I'll go and I'll hire my administrator. And I may not have the order right. It doesn't really matter. And I know I use my restaurant analogy, even though most restaurants are closed right now in the United States, but you can't open a restaurant and have a table with no chair and say, once patrons come in and I make some money, I'll go buy the chairs. All right. You can't have the chair with plate and no flatware. You need everything in place on day one with a investment management company, with a fund on day one before first dollar comes in, so that that customer, which is what your investor really is, has a good experience to tell his or her friends and neighbors about the good experience. Like when you go to a restaurant and say that was fantastic, and you're the best advertiser for that restaurant when you had a good experience. And conversely, you have a bad experience, you're the one, don't go to that place. That place sucks.
Keep the vulgarity down, please. This is a family event.
Yes, I know.
I just want to quickly add, and you guys can tell me if you don't see this, but one of the biggest things that just irks me is internal communications within that firm, that management company. CC your whole team. If you have 2 other partners that are starting this fund with you, make sure everybody's CC'd the whole time. Everybody has to be on the same page. Everybody needs to know what's going on internally within that investment management firm. And you're going to get in a lot of hot water when you're now not CCing and you're now not keeping a track what investors you're talking to, of what you're saying, of what you're presenting. So get in the habit from the very beginning that everybody is just always copied on every single communication that has to do with your management firm and your offering.
Well, just adding to that, I totally agree. The process, we like on the administration side, like to know when we're talking to folks, as you know, many of these firms may start out with their first fund, their emerging manager, they wear multiple hats, but I want to know who we're going to interface with on a day-to-day basis, who's going to be accountable on their side, and just understanding what that process is going to look like. So if we're having a conversation with the CEO and there's a separate CFO involved, we need to have them part of this conversation as well, so they understand the objective of what's
Right.
going to happen on a day-to-day basis. I totally agree.
Yeah, that's a very, very good point. So we got a couple minutes left. I'd like to ask each of you to give predictions for 2021. Clearly, we're coming up close to the end of the year. It looks like we'll have a new administration in January, and potentially one party controlling all 3 branches of government, or all 3 levels of government, I should say. 3 houses of government, areas of government. And so just curious what, Jen, starting with you, what do you see happening in 2021?
Well, I'm not going to stick my finger in that honey pot, so I'm just going to skip past all of the political stuff on that. I don't care to even talk about it if I never talk about it again. But I do see progress being made. I see new managers that are going to come out of this. I see innovative, creative, emerging managers that are going to take the lessons, sometimes unfortunate lessons that have been learned in 2020, and apply them productively to 2021 and launching their fund. I think that they're being more conservative. I think that they're going to be more weary of how they start their fund, as they should, and understand the undertaking. Start small if you need to, baby step it. But I think that 2021 is going to be, it's going to be really great for the industry, and I think for the country. I'm staying positive because you gotta.
What else can you do, right? Dennis, what do you think?
I'm not as optimistic as Jennifer. A lot depends on what's happening with the pandemic. The pandemic has destroyed some businesses and made some other industries successful. And I think that depending on how long this goes in bed, it will create new industries that we don't even know of right now. And there's going to be, I think we're having a seismic shift in the way that we're conducting business. We're forced to, the way that we're conducting business and the way things are going on. As it directly relates to the investment management business, I think that it's going to be steady as it was in 2020. I don't think it's going to be tremendous growth or tremendous decline. I think it's going to be kind of steady because there's going to be some people that are going to be eager and aggressive, and there's going to be some people that are a little bit more conservative in the sense of just trying to hold on to what they have. And then there's going to be others that are just going to get decimated. So But, depending on, they say this vaccine, which I predict will be announced on January 21st, we could see a whole lot different. If there's a vaccine that works and people get comfortable again, going outside. I'm here in Manhattan where we have 25% open for restaurants. And I can tell you, I don't know any restaurant that has turned people away, nor has come close to the 25%. So it's more than just,
local business gift cards.
yeah,
That's your Christmas present. Support local business.
yeah, it's so, it's really hard to tell in the middle of this.
Yeah. Skylar, what are your thoughts?
Yeah, I'm cautiously optimistic. I'm a realist in the fact that I understand this is probably going to go into 2021 as far as our current pandemic and situation. I'd say it's fundamentally changed how we interact with our clients today and how they're going to interact with their investors and how they're finding investors, how the due diligence process works. Even just more questions around that process. I've had one, for as an example, a manager said he's a one-man shop starting a fund. And he's basically said a couple of his institutional investors are asking him, well, what happens if you get, the coronavirus? How are you going to operate? Do you have infrastructure around you? Those questions are being asked today, and that obviously wasn't relevant, beginning of the year. So that I see more of the same for that. But I do think, to Dennis's point, that will create opportunities in the marketplace for some of our managers that we support, and others are going to have a hard time. I think that will be, that'll kind of play out more so middle to end of next year.
Right, well, thank you. I am sort of cautiously optimistic as well. I sort of echo Dennis's comments that the entire country will be vaccinated on January 22nd. And they're just going to drop it from airplanes and we'll all breathe it in. But
They could drop some money down with it. That would be great.
It's like
that's coming before Christmas. That's coming December 1st.
Like the Kingsman. You remember the Kingsman?
Right, exactly.
The drones.
Either that or they're going to get one of those sticks from Men in Black where they'll just push a button and we won't remember that such a thing as a virus. So that might be coming too. But I am also cautiously optimistic. I think we're going to have a good 2021. Well, with that, I want to end this program. This has been a great conversation. I want to thank the panelists, Jen, Skylar, and Dennis, for taking the time. I know it's a busy time. For those of you who have any questions going forward, please feel free to reach out to any of the panelists. All their contact information is available in this program. So please do that. Thank you very much and have a good day.